Hello everyone, welcome to my channel Commerce World. In this video, we are going to learn a most important topic, that is journal, relating to the subject accountancy. We all know that accounting cycle begins from business transaction. Soon after that, it proceeds to journal, then ledger, then trial balance, then final accounts. Yes, today we are going to learn about the journal. So today's topic is journal, entire chapter. Let's concentrate for journal entries. Before going to start with the journal entries, let's discuss a short meaning about the journal, journalizing, narration. First, what do you mean by journal? Journal means recording of day-to-day transactions in a chronological order. The recording of day-to-day transactions in a chronological order as per the date wise, as and when the transaction has occurred. When we record in a chronological order, it becomes the journal. And the process of passing the journal entries, it becomes the journalizing. Journalizing means the process of passing journal entries is said to be a journalizing. So every journal entry, below that we are going to write one explanation which is said to be a narration. So what is narration? Narration means brief explanation of the transactions. Remember, narration is nothing but a brief explanation of transaction. Hence, it's very clear that we understood the meaning of journal. Journal means recording of day-to-day transactions in a chronological order, whereas journalizing means the process of passing journal entries, it becomes the journalizing. And what do you mean by narration? Narration is nothing but a brief explanation of the transactions. Dear guys, now let us move to the format of journal. The format of journal comprises of 5 columns. The 5 columns are: number 1, date, then particulars, then LF, which stands for ledger folio, then debit rupees, then credit rupees. This is the format you need to follow whenever you are going to pass the journal entries. Now, to know about the journal entries, one must be very clear with the rules of debit and credit as per the English approach. We all know that according to English approach, the rules are categorized into 3 types of accounts: personal account, real account, and nominal account. And what is the rule of personal? Debit the receiver, credit the giver. And the rule of real account, debit what comes in and credit what goes out. And the rule of nominal account, debit all expenses and losses, credit all incomes and gains. So let me take you in a brief explanation. The personal account is the account relating to the person. Okay. So when the person is receiving the benefit, we have to debit it. When the person is giving the benefit, that particular person has to be credited. And about the real account, anything which the business receives, that we have to debit, and anything which goes outside of the business, that we need to credit. And the rule of nominal account is very simple and very important one, which says that whenever we incur the expenses, like we are paying salary, rent, commission, whatever the expenses incurred by the business, that has to be debited, and whatever the incomes received by the business, that has to be credited. Now let's move to some simple basic transactions. So to start with the journal entries, I have taken around 3 to 4 transactions here first. So first transaction, let's start with the basic thing, which is about the starting of business, that is commencing of business or investing into the business. So always the journal entries begins with the first transaction, that the owner, which is said to be a proprietor, he is going to invest into the business. Say for example, see the first entry. Mr. Ram commenced business with cash rupees 1 lakh. Mr. Ram commenced business with cash rupees 1 lakh. Means Ram is a proprietor, Ram is the owner who is investing 1 lakh rupees into the business. So always when we pass the journal entry, we need to remember one very important concept, that is separate entity concept, that is business entity concept. What does this concept says? That we should always think from business point of view, not from the owner's point of view, because owner is different, business is different. So let's think from the business point of view. So since Ram is an owner, he is investing into the business. So what he is investing? Cash. So what come inside the business? Cash comes inside. Okay. And who is the giver of cash here? Ram. So Ram is the giver of cash. When he is giving, when he is investing, the amount of money which is invested into the business, that is said to be a capital. So instead of using Ram name, we use the word here capital. So Ram is the giver of capital, and what comes inside the business is cash. So the first entry always C to C. What is C? Cash. What is C? Capital. So the entry cash account debit to capital account, 1 lakh in debit column and 1 lakh in credit column. Hope you okay. Now in the second transaction, let us understand with the help of few assets. Imagine the transaction is like this. Mr. Ram started business with cash 1 lakh, stock 1 lakh, furniture 1 lakh, machinery 1 lakh, building 1 lakh. So all these assets he introduced into the business. So assets means always remember real account. The rule of real account, debit what comes in and credit what goes out. So all these assets comes inside the business. Let's see how will be the entry. Always we need to debit the assets. So the entry will be cash account debit, stock account debit, furniture account debit, machinery account debit, building account debit. Debit all these values with 1 lakh. So 1 lakh, 1 lakh, 1 lakh 5 times and credit with 5 lakh. It becomes to capital 5 lakh. Means Mr. Ram has invested into his business total amount of capital 5 lakh rupees in the form of various assets. So the narration will be being Ram invested into the business with the following assets. So we know that narration is the brief explanation of the transaction. Now entry number 3. In entry number 3, I am going to take into account asset as well as the liability. So asset I am taking into account here is debtor. Who is a debtor? Debtor is a person who owes money to the business. And also I am taking one liability item. That liability item is creditor. Always remember, creditor is a liability, debtor is a asset. So what is creditor? Creditor is a person to whom business owes money. Okay, so remember, if you see the transaction asset, you need to debit. If you see the transaction liability, you need to credit. And we need to apply the equation here, assets minus liability is equals to capital. Always remember, to find out the capital out of assets, you need to deduct the liabilities. So assets minus liabilities becomes the capital. Let's see this entry with the help of one transaction. Imagine the transaction is like this. Mr. Ram commenced business with cash 1 lakh. Okay, and amount due from Rahim 1 lakh rupees and amount due to Rahul rupees 50,000. Okay, so Ram started business with 1 lakh rupees cash and amount due from Rahim is 1 lakh and amount due to Rahul is 50,000. This is the transaction. In this, the from and to matters a lot. So amount due from Rahim means Rahim has to pay amount to the business, so it becomes a debtor. And amount due to Rahul, so business has to pay to Rahul, it becomes a creditor. So the journal entry will be cash account debit, debtors account debit. In the bracket you can write amount due from Rahim. Okay, to creditors account. Creditors is nothing but here amount due to Rahul to capital account. And how to find the values here? Cash 1 lakh rupees, amount due from Rahim 1 lakh rupees. So 1 lakh plus 1 lakh, 2 lakh is debited. And creditor we have written here 50,000. Out of 2 lakh you deduct 50,000. The balance 1 lakh 50,000 goes to capital. Here with the help of accounting equation we can ascertain the capital. That is to find out the capital, assets minus liabilities. So total assets we had 2 lakh and liability we had 50,000, that is creditor. So 2 lakh minus 50,000, the answer will be 1 lakh 50,000 goes to capital. We can say the narration here, Ram started business with the following assets and liabilities. Now let's talk about the two more important transactions about depositing the money into the bank and withdrawing money from the bank. So what will be the entry when we deposit the money into the bank and what will be the journal entry when we withdraw the money from the bank? So let's take the entry first one. So deposited cash into bank rupees 1 lakh. Okay, so concentrate here. When we deposit the money into the bank, first of all, we should know from the business point of view, is anything comes inside the business or goes outside the business? Yes, it goes outside the business. What goes outside the business is cash. How much cash goes outside? 1 lakh. Where it is going exactly? Bank. So bank is the receiver here. So personal account says that debit the receiver. So bank we have to debit it. And real account credit rule says that credit what? Goes out. Here cash goes out. So the journal entry for this will be bank account debit to cash account, being deposited cash into bank, 1 lakh debit and 1 lakh credit. Remember, bank is the receiver, cash goes out. So the entry is B to C, bank account debit to cash account. Let's understand the same transaction in a reverse way. So now we deposited the cash. The next transaction is withdraw cash from bank rupees 1 lakh. Now we have withdraw the cash. So when we go to the bank and we withdraw the money, first we have to think from business point of view, what comes in here? Cash comes in. Who is the giver? Bank is the giver. So very easy. The journal entry will be cash account debit to bank account. That is C to B. Debit 1 lakh and credit 1 lakh. Narration you can write being withdraw cash from bank. So remember, when we withdraw, cash comes in. When we deposit the money, cash goes out. Okay, now let us understand two more very important entries relating to the drawings. That is drawings. Do you know what is drawings? Drawings means the cash or the goods which is withdrawn by the proprietor for his personal use. Many a times the owner, he will use the business cash as well as he use business goods for his personal as well as the domestic purpose. That becomes the drawings. So drawings related to journal entries I am going to explain you here. Number 1, withdraw cash by the proprietor for his personal use. So withdraw cash for personal use. So whenever you see the personal use, remember it's relating to drawings. So we need to pass the journal entry in this way, that is drawings account debit to cash account. As I will say you, every time from the business point of view we have to think what comes inside the business what goes outside the business. Here when the proprietor withdraw cash from the business, cash goes outside. So we need to credit to cash. Got it? And debit the receiver. So drawings is related to personal account, so we need to debit the drawings. So proprietor is the receiver of drawings, so drawings account has to be debited, that is debit the receiver. So the entry will be drawings account debit to cash account, DC. You can remember the code, drawings to cash, and you can write the narration being withdraw cash for personal use. So this is about the cash. Now let us understand one more drawings entry, that is goods. So withdraw goods for personal use. What will be the journal entry for this? So here the proprietor is not withdrawing the cash, he is withdrawing the goods from his business. So for this, whenever you see the word personal use, just remember you need to debit the drawings. So once again the journal entry will be drawings account debit to purchases account. So instead of using the goods, we use the word purchases. Yeah, let's take into amount 10,000. That is drawings account debit to purchase account, debit column 10,000 and credit column 10,000. Now let us understand two more very important entries relating to sales. One is cash sales, another is credit sales. Imagine if there is a transaction, cash sales rupees 1 lakh. So what does this transaction says? It says that we are receiving the cash and we are doing the sales. So in that case, from the business point of view, we have to think what comes in and what goes out. Here cash comes in and sales goes out. So the entry for the cash sales will be cash account debit to sales account, 1 lakh in the debit column and 1 lakh in the credit column. You can write the narration being cash sales made. Now let us understand one more, credit sales. Imagine how to understand the transaction for credit sales. So in order to know about the credit sales, the word cash will not be given in the question. In addition to that, the name of the person to whom we sold the goods, that will be given in the problem. So the transaction will be like this. Sold goods to Avinash rupees 1 lakh. So sold goods to Avinash rupees 1 lakh. We have to think from business point of view. So from business point of view, when you think what comes in, nothing comes in here. So what goes out, sales goes out. Then who is the receiver here? Avinash is a receiver. So we know that Avinash is a person. So personal account debit rule says that debit the receiver. So the entry will be very simple. Avinash account debit to sales account. 1 lakh debit and 1 lakh credit. Avinash is the receiver and sales goes outside the business. Hence sales is credited. Narration you can write being sold goods to Avinash. This is a credit transaction. Now let's continue with the two more transactions relating to purchases. One transaction of cash purchases and one transaction of credit purchases. Let's see this transaction. Cash purchases rupees 1 lakh. What does it mean? It means we purchase the goods by making the payment of cash rupees 1 lakh. So again from the business point of view, if you think what comes inside of our business, purchases comes in, and what goes outside the business, cash goes out. So the entry for this, purchase account debit to cash account, 1 lakh in debit column and 1 lakh credit column. You can write the narration being cash purchases made. So always remember, in the most of the transaction, purchases is always debited. In most of the transaction, sales is always credited. To understand about the credit purchases, let's take one transaction. So for that, cash word will not be there in the transaction, but name of the person will comes in the transaction. So the transaction will be like this. So purchase goods from Avinash rupees 1 lakh. So here we are purchasing the goods from whom? From Avinash. So again from the business point of view, you have to think. So what comes inside the business? Goods, but goods what we will not use. Instead of that, accounting principle says that we need to use the term purchases. So purchases comes in here. And who is the giver? Avinash is the giver. So always credit rule of personal account says that credit the giver. Hence Avinash will be credited here. So the journal entry will be purchase account debit 1 lakh to Avinash account 1 lakh. Being goods purchased from Avinash, you can write the narration. For the same transaction, if I add asset for this, so what will be the journal entry? Imagine credit purchase transaction along with assets purchased. So let's see the transaction. Purchased computer from Avinash for rupees 1 lakh. So here I added the word computer since computer is an asset. So asset means we need to connect with the real account. What does the real account rule says that? Debit what comes in. So here we are buying the computer. Computer comes inside of the business and hence we are not going to pay any cash over there because it is a credit transaction and Avinash is the giver and the giver is credited as per the rules of personal account. So the journal entry for this, computer account debit to Avinash account, that is computer comes in and Avinash is the giver. Narration you can write being purchased computer from Avinash, debit 1 lakh and credit 1 lakh. Now let us move to the most important part relating to the expenses journal entry. Yes, of course, when a person does a business, a lot of expenses going to be incurred like making payment of rent, making the payment of salary, commission, all those things. So let me tell you about the expenses entry. Let's take one example. Imagine the transaction is like this. Paid salary rupees 10,000. So here the word paid is very important. Whenever you see the word paid in the transaction, remember in that transaction cash goes out and we are making this transaction payment for the purpose of salary. So since salary is what type of account? It's a nominal account. So what does the nominal account rule says that? Debit all expenses and losses, credit all incomes and gains. So from the business point of view, when we think when business is paying salary, it's a expenses for business. So always whenever any expenses paid by the firm, it has to be debited. So the journal entry will be salary account debit 10,000 to cash account 10,000. Narration you can write as usual being salary paid. For the same transaction, if I merge 2-3 expenses, imagine the business is paying the salary, rent and commission, these 3 also. What will be the journal entry for this transaction? The firm paid salary rupees 10,000, rent rupees 10,000 and commission rupees 10,000. So firm is paying 3 expenses here. Okay, whether the firm is paying 3 expenses or 5 expenses or 10 expenses, all the expenses we need to debit, and in such type of transaction always cash goes out. So let us see what will be the journal entry. So salary account debit 10,000, rent account debit 10,000, commission account debit 10,000 to cash account. Add all the debit entries, 10 plus 10 plus 10, that is 30,000 has to be credited, being following expenses paid. Let us understand the transaction relating to income. Just now we learnt about the expenses. Now let us understand about the incomes. Imagine when the firm is receiving some incomes, what will be the journal entry? So I am taking one example, journal entry in this way. Commission received rupees 10,000. In the previous transaction, I used the word paid. When there is a paid, cash goes out. But now I am using the word received. When there is a received, always remember cash has to be debited. So the transaction is commission received 10,000. So we are receiving the commission here. Most of the time what happens, you will debit the commission. In that case, it will become wrong because commission relating to nominal account rule says that debit all expenses, credit all incomes. Here we are receiving the commission. Hence the commission will become an income. So always income has to be credited. So the entry will be cash account debit 10,000 to commission account 10,000 being commission received. So few more entry relating to the income received. Imagine you are receiving a salary, you are receiving a commission and you are receiving a rent. 3 things you are receiving. So the transaction is like this. So commission received 10,000, rent received 10,000, salary received 10,000. So all these payments you are receiving in the form of cash. So as I told you, when there is a word received means cash account has to be debited and all these incomes you are receiving which has to be credited because nominal account rule says that debit all expenses, credit all incomes. So in this transaction, rent, the salary, commission is an income for firm and the firm is receiving cash. So the entry will be cash account debit to rent account to commission account to salary account. Write all the amounts in credit column 10,000, 10,000, 10,000 and total cash benefit we received is 30,000. It has to be debited being the following incomes has been received. You can write the narration. Now let's move on to the transactions relating to discount and full settlement. Imagine there is a transaction where we are receiving the cash as well as allowing the discount to the party. So let us take one example relating to this transaction. Received cash rupees 9,000 from Arun in full settlement of his account rupees 10,000. So here we received cash rupees 9,000 but Arun has settled total 10,000 to the firm. So imagine Arun supposed to pay to us is 10,000 but he paid only 9,000. In that case, from business point of view, we have allowed him discount. So the entry will be when we are receiving the cash from Arun, So cash account must be debited. And the firm is allowing discount to Mr. Arun. Even discount allowed should be debited, because nominal account rule says that debit all expenses. Here the firm is allowing the discount, hence discount has to be debited to Mr. Arun account. So the complete entry is cash account debit 9,000, discount allowed account debit 1,000 to Mr. Arun account. Total how much he settled? 10,000. Being cash received and discount allowed, you can write the narration in this way. In the similar to this, let me take one more transaction. Received rupees 4,500 from Basha in full settlement of his account rupees 5,000. So once again, let us understand very clear. So Basha supposed to pay us 5,000, but he paid only 4,500 and he settled the complete account. So in that case, the firm is allowing him a discount. So what will be the entry again? Cash account debit, discount allowed account debit to Basha account. So how much actually cash has been received? That is 4,500 has to be debited. So cash account debited with 4,500 and we allowed the discount to him. Discount has to be debited with the amount of rupees 500 and total how much Basha has settled to us is 5,000. 5,000 has to be credited. So you can write the narration being cash received and discount allowed. Such type of transaction whenever you pass, just remember, if the personal account is going to be debit, the discount as well as cash, it will be credited. If the personal account is credited, the discount and cash will be debited. So in this transaction, in this entry, you can notice here cash is debited, discount allowed is debited, and the person, that is Basha, is completely credited. So let us go for the revert transaction. So these transactions are receiving of cash and full settlement. Now let me take the example, payment of cash and full settlement. So what will be the transaction? So here the transaction is this. Paid rupees 9,000 to Mr. Arun in full settlement of his account rupees 10,000. See, we paid, actually the firm, the business, we have to think always from the business point of view, how much actually the business paid the cash. So the firm paid only 9,000, but the firm supposed to pay total 10,000 and we settled the complete account. So in this case, we paid cash only 9,000 and we settled completely 10,000. What will be the journal entry? So journal entry, when we pay cash, as I told you in the previous entries also, whenever we pay the cash, cash has to be credited. Whenever we receive the cash, cash has to be debited. So in this case, we paid a cash to Arun. Since Arun is the receiver, Arun is a personal account. The rule of the personal account says that debit the receiver. So we need to debit the Arun account. So Arun account debit to cash account to discount received account, because we supposed to pay 10,000 to Arun, actually we paid only 9,000 and the firm earned discount 1,000 rupees. So the way of entering amount, Arun account should be debited with rupees 10,000 in the debit column, to cash account 9,000, to discount received account rupees 1,000. So debit should be equal to credit. In the debit column also you have 10,000. In the credit column also you have 10,000. So let me clear you. When personal account is debited, that is Arun is debited, the discount and cash will be credited. Okay, if Arun is credited, the discount and cash will be debited. This is the technique you have to remember for such type of transaction where cash paid in full settlement. Let me take one more example relating to similar transaction. Paid cash rupees 4,500 to Basha in full settlement of his account rupees 5,000. So what does it mean? We supposed to pay 5,000 to Basha, but actually we paid only 4,500. Once again, the firm has earned a discount of rupees how much? 500 rupees. So what will be the entry here? First we have to think what comes in or what goes out. Here cash goes out. Who is the actually receiver? Basha is the receiver. So Basha account has to be debited. So the entry will be Basha account debit to cash account to discount received account. So Basha account should be debited with 5,000. To cash we actually paid only 4,500 and we settled 5,000, that is debit minus credit, 5,000 minus 4,500 to discount received, that is 500, being cash paid and discount earned. The technique of passing such type of entry is, if personal account is debited, cash and discount will be credited. If personal account is credited, cash and discount will be debited. Now let us understand the transaction relating to trade discount. Till now whatever we discussed is it's a cash discount. Now I am stepping to the trade discount. Basically there are two types of discount. One is cash discount, another is the trade discount. Now how will be the transaction of trade discount and how to pass the journal entry and how to deduct the amount of discount and show in the debit as well as the credit column. So let us take the example. sold goods to Hari rupees 10,000 at a trade discount 10%. So we have sold goods to Hari. Okay, so we have to think from business point of view, what comes in or what goes out. Here nothing comes in, but sales goes out. Who is the receiver? Hari is the receiver. Normally we know the journal entry, Hari account debit to sales account, but at the same time they had given the 10% trade discount. So always discount is a deductible price. We have to deduct it. So out of 10,000, the 10% discount amount will be 1,000 rupees. So 10,000 minus 1,000, actual amount is 9,000. Only 9,000 has to be recorded in the journal entry. So the entry will be Hari account debit to sales account, 10,000 minus 1,000. You have to record 9,000 in the debit column, 9,000 in the credit column, being goods sold at a trade discount of 10%. So similar to that, let us understand the trade discount relating to purchase transaction. Now, what will be the end transaction? Purchased goods from Basha rupees 10,000 at a trade discount of 10%. So here we purchase goods. Got it? And who is the giver here? Basha is the giver. So purchases comes in, Basha is the giver. So the journal entry will be purchase account debit to Basha account. So should we have to record 10,000? Absolutely not, because 10% trade discount is there. So out of 10,000, calculate the 10% trade discount, which comes to rupees 1,000. So 10,000 minus 1,000, it becomes 9,000. So purchase account debit to Basha account, 9,000 you have to record in the debit column and 9,000 you need to record in the credit column. This is the way you need to pass the journal entries relating to the trade discount. You can write the narration being purchased goods and discount at a trade discount of 10%. Now I am going to tell you about another very important entry relating to goods distributed as samples. Many a case in the journal entries, even this transaction will come. So pass the journal entry for goods distributed as samples. So if goods distributed as samples of rupees 5,000, this is a transaction. Goods distributed as samples rupees 500. So what will be the journal entry? So whenever you distribute the goods as sample, basically we are going to distribute the goods for the purpose of advertisement. So our expenses here is advertisement expenses, that has to be debited. And since we are giving the goods, instead of using the goods, you need to record as a purchases. So the entry will be advertisement account debit to purchases account. If you want, you can write in the bracket goods. Remember, this is a very important entry, that is goods distributed as samples. We will not record the goods, we will record the purchases, because we are distributing in the form of advertisement. So advertisement account debit to purchases account, being goods distributed as samples. Now let us understand about the outstanding entries. So which are the outstanding entry? Outstanding entry, I will take into account two entries as an example. One is salary outstanding rupees 1,000. Another I take as rent outstanding rupees 2,000. So salary outstanding 1,000, rent outstanding 2,000. What will be the journal entry for this? So whenever any expenses are outstanding, that particular expenses has to be debited and that outstanding has to be credited. So the entry relating to salary outstanding, salary account debit to outstanding salary account. Okay, very simple. Salary account debit to outstanding salary account, debit column 1,000, credit column 1,000. Similarly, even for rent outstanding, you can pass the entry in the same way. Rent account debit to outstanding rent account, debit column 2,000 as well as credit column 2,000. So I hope you understood clearly about the outstanding entries. So salary account debit to outstanding salary account, rent account debit to outstanding rent account. Narrations are normal, being salary outstanding, being rent outstanding. Just now we understand the entries relating to outstanding. Now let us understand the entries relating to received in advance. What will be the journal entry when we received commission in advance, and what will be the journal entry when we received rent in advance? Okay, so let us take an example. Commission received in advance. So what will be the journal entry? So when we receive commission in advance, you need to debit commission account to be debited to commission received in advance account. So commission account has to be debited to commission received in advance, debit with 1,000 and credit with 1,000. You can write the narration being commission received in advance. Similarly, the entry relating to rent received in advance. So what will be the journal entry for rent received in advance? That is rent account debit to rent received in advance account. You can write the narration being rent received in advance. Now let us understand the last journal entry relating to bought additional capital. That is bought additional capital rupees 1 lakh. As we know that whenever we start the journal entries, always the first entry begins with commence business with cash, where I have been told you that you need to remember C to C, that is C for cash and C for capital, the same type of journal entry to be passed for bought additional capital. It means the proprietor, the owner of the business, has introduced further capital into the business. So whether he starts the business or he invests further into the business, in both the cases the cash comes in, owner is the giver of capital. So the journal entry for this is similar to the first transaction, cash account debit 1 lakh to capital account rupees 1 lakh in the credit column, being additional capital introduced, or you can say being further capital introduced. And thank you so much for watching my video. Hope I am clear with complete transactions relating to the journal. So thank you so much for watching.